Welcome to Option Trades Today. I'm Tony the Bat Batista, and I've got a trade idea for you today, December 8th, 2022. And before I get to that trade, do me a favor. If you're watching this on YouTube, please like and subscribe. Let me get some traction on my podcast. I see all of your messages that you send me there. I try to respond to every one of them. I'd love to get this to be successful and share the knowledge for free for everybody out there. All right, what are we going to take a look at today with the market catching a little bit of a bid and volatility surprisingly also staying bid? Volatility basically unchanged today. And as you can see, it's been rallying over the last 4 or 5 days because the market has been going lower over the last 4 or 5 days. Now today with the market catching a bid, volatility on the other hand is staying bid also. So maybe we've reached a low in volatility, or the market stays bid all day. We can expect a little bit of contraction in the overall market. All right, you know what I'm going to do. I'm going to look on the left-hand side here and see what the market is doing. It's obvious that if you look here on a percentage basis, that the NASDAQ and the Russell are your two highest, and your E-mini S&Ps, although both positive today and positive nicely by 0.75 of a percentage point, the E-mini S&P and the Dow are the weakest relative. Does that mean anything? No, it's just kind of a good to know. Some things make you money. Some things are good to know. This is something that's good to know. I'm actually going to be looking at oil today, not /CL, which has an okay IV rank of 26, but it's a very big product. I'm going to look at something that has a lot of oil-related stocks in it. Let's go to our watch list to check this out. All right, what am I going to look to do here? You know me, I like to go to the IVX 5-day change. If I'm selling premium, I like to sell something where the IVX 5-day change has been rallying, meaning going higher, meaning that it's green on the platform, and there are no earnings. I like to go to stocks that have a high IV rank and have IVX 5-day change going higher. One of those stocks that I've found is XOP. Well, it's not really a stock, it's an ETF, right? XOP, if we scroll down here, volatility over the last 5 days is up 5%. And the IVR, the implied volatility comparing XOP to XOP, is 38, which is relatively high. The stock is actually a little bit lower by 55 cents. Let's take a look at just a graph of what XOP has been doing. XOP, which has a lot of gas and exploration stocks in it, like Oxy, OXY, which happens to be down about 12 cents today. As you can see, it looks just like XOP's chart. But look at something. XOP has Oxy in its portfolio 2 or 3%, but it has an IV rank of 10, so it's low in Oxy. ConocoPhillips is another one. IV rank of 37, almost as high as XOP. Another one would be XOM. XOM, IV rank of 28. So a lot of the components of XOP actually have an IV rank lower than what's in XOP. Now, obviously, XOP is going to move just like those stocks. If those stocks go higher, XOP is going to go higher. If those stocks go lower, XOP will go lower. So let's take a look at what we can do, because we've got good IV rank, 38%. I'm going to try to catch a little bit of a falling knife here with oil trading at all-time lows for the year. I'm thinking, you know what? Maybe it's time to jump into XOP. Let's take a look at what we can find. In XOP, I'm going to go to the January options with 43 days, standard. 45 is optimal for us when placing trades. That's just a time frame, a range of when we want to do something. And I want to catch a falling knife, which means I want to have something with a bullish strategy. Now, there's a lot of premium in here, but you got to remember, it has a $17 expected move over the next 43 days. This is not a product like other $135 stocks that might have a 25 or 30 monthly implied volatility. This has a big $17 expected move. So I'm going to go to my area where I like to start to look for trades, and that's somewhere around the 15-ish delta option. I've done a little bit of math here for you, and you're going to have to do a little bit of math at home also on this trade, because I'm going to do something that I haven't done before on this podcast, I don't believe, which is a ratio spread, but not your typical 1/2 ratio spread. Let me explain. I'm going to go to the 113 put. That's about a 15 delta. And I'm going to sell. I'm going to go as wide as I can. I decided to go to the 106 put. Let me explain to you why. I'm going to be $7 wide here, and I'm collecting 31 cents. I'm using $1,200 in buying power. And I said, you know what? 31 cents isn't enough for me. I love this wide $7 wide spread, but instead of selling 2, I'm going to sell 3, 1/3. That's right, 1/3. I'm buying 1, selling 3. So you're going to have to do a little bit of math, because it's a little bit different than a 1/2 ratio spread. So let's take a little bit of a class in math here. All right, you ready? Okay, I was able to get $1.61 on this spread. Okay, $1.61. Markets are a little bit wide here, as you can see, 7 cents by 7 or 8 cents. So that's why you'll have the bid ask is a little bit wide. The stock was down around $1.07 or $1.10 when I got filled. So you'll need XOP probably to go a little bit lower, or you'll have to move your strikes by 1. If you go to the 114, 107, you'll get, a higher credit to receive. Is it a very similar trade? Of course, it's a very similar trade. It has a 94% pop. The delta of this trade is positive by 12, because my assumption is a little bit that I want to be long it. Has 12 long deltas, which means the position presently equals 12 shares of XOP. It has $8 in theta decay. My beta weighted deltas is positive by 8.5. That's long deltas in SPY. So this almost has a 1-to-1 relationship with SPY, even though the correlation is 0.65. I'm using $2,400 in buying power to make the $161 that I was able to collect on this. Remember, this is 1/3. So the most I could make on this trade, if it were to go all the way higher and never go lower, is $161. But let's take a look at something here again. And you've watched this podcast. You know, this is a trade I like to do. I like to have this 94% pop and still collect myself $1 or more. But remember, if the stock goes down to 106, this is a $7 wide spread. So you could make $7 on top of the $1.61 you made. So that's $8.61. You could make, in a perfect scenario, which I would not play for, which only has a 23% chance of actually touching 106. There's a 36% chance that we touch 113. I put probability of touch up here for you, so you could take a look at the delta and the probability of touch. You're using $2,200 in buying power for that possible $861 profit at 106. What's a realistic view? Well, you know what? If the stock goes a little bit lower, slower, maybe you can make $2-3. Really, what am I looking to make? About that $160. 90 to that $160 would be a home run for me over the next 43 days. I told you you're going to have to do a little bit of math. You could use a calculator. I had it up there for a moment. I lost it. I don't know where it went, so I can't put it back up for you. But let's just do it together in our heads. You'll remember the 106, 113 spread that you have here, and I know it's 1/3, but just work with me here for a moment. Let's go 1 by 1. That spread will be worth $7. If this stock goes lower at expiration, that spread will always be worth $7 if it goes lower than that 106. So you have it 1 by 1. That leaves us 2 more contracts left over. Our possible profit is $8.61 credit. So you have 2 contracts versus that $8.61 credit. So you do $8.61 divided by 2, which leaves you $4.30. So your break even is $4.30 below your 106. That gives you a break even of 101.69. And you can see right here that green line ends right in between 101 and 102. So for argument's sake, you could say your break even is 101.5. But if you were to get filled at this at $1.61, your break even is 101.69. And there's only about a 7%. There's only a 7 delta and 18% chance of a touch that you ever have to worry about this trade at expiration. Now, if XOP goes lower, this spread is going to widen, mean it's going to grow more. I told you a moment ago when I placed this trade, the stock was down around $1, $1.10, and it was trading for $1.61. Mid price is $1.58. I had to go 2 or 3 pennies below mid price because the markets are good, not great in XOP. So this spread with the stock moving 30 or 40 cents has moved 3, 4, or 5 cents. It's not a big moving. As a matter of fact, it's going to move about 12 cents. That's 12 deltas, 12 cents on every dollar move in XOP one way or the other, because that is your delta of this position. All right, everybody. I hope that you enjoyed this podcast. And if you're watching on YouTube, please like and subscribe. If you're just watching this or listening to it via my podcast, please like and subscribe there too. And do us one more favor. I'm asking for a lot here. It's the end of the year. Please open up an account at tastyworks.com so that we can keep all of our programming at tastytrade.com free and available to everyone. Enjoy yourselves today.